Okay, so now let's begin the next illustration. Illustration number 6. This problem will take minimum 1 hour. It has all possible basic adjustments which are required. So let's begin. The following balance sheet are given as a 31st March. Best Limited and Better Limited share capital, reserves, current liability, non-current assets. The best part is they don't have any notes. Further information is given. Better Limited issued bonus share on 1st April in the ratio 1 share for every 2 share held out of reserves and surplus. It was agreed that Best Limited will take over business of Better Limited. So Best Limited is purchasing company and Better Limited is so selling company. Before they sold their company, they have gone for bonus issues. On the basis of later balance sheet, the consideration taking the form of allotment of shares in Best Limited. The value of shares in Best was considered to be 150 and shares in Better were valued at 100 after the issue of bonus share. The allotment is to be made based on these values. Which method will be followed? Intrinsic value. Intrinsic value. Liability of Better Limited included 1 lakh due to Best Limited for purchases from it on which Best Limited made profit of 25% on cost. Transactions like this are called intercompany owings. Intercompany owings. Now, before I continue the adjustment, let me explain what is this intercompany owings. Now, let's say, for example, Jitender, I have sold goods to Ronak worth 1 lakh for credit, 1 month credit. Before the credit period get over, I acquired Ronak. So I am the purchasing company. Okay, fellow. So before the credit period get over, I am the purchasing company and Ronak is the selling company. Now in my balance sheet, there'll be one second. Jitender, I have sold goods to Ronak, purchasing company. Yeah. In my balance sheet, there'll be debtors of 1 lakh. Everyone. Yes. Now in Ronak's balance sheet, there'll be creditors of 1 lakh. Yes. Everyone. Yes. But not only this, Ronak will also have stock of 1 lakh. Ronak will also have stock of 1 lakh. Now, as soon as I acquire Ronak, I'll acquire his creditors 1 lakh and I'll acquire the stock 1 lakh. Everyone. Now, AS 14 is telling these debtors and creditors are no more existing now because these two are same companies. Everyone. Yes, these debtors, again, a very mock way, but if you have watched that recent wala 3, 2, 3, वो लास्ट सीन में यू सी दोनों एक हो जाते हैं हाँ like that. So now both this company will become one. So there is no separate Jitendra Limited, there is no separate Ronak Limited. Both the entities have become one. So these debtors and creditors should be cancelled. This is called intercompany owings. What will be the journal entry? Creditors to debtors. Both creditors and debtors gets knocked off, everyone. Now, next problem, bhaiya, stock 1 lakh. Now, when I sold stock to Ronak, I would have sold at a profit. So that profit is included in this 1 lakh. That has to be removed. That has to be removed. How it will be done? When we do the problem, I'll help you with the numbers. But remember one thing, intercompany owing debtors, creditors, you will cancel. And in this stock, you will remove the profit element. Everyone, is it clear? So, make the closing ledger in the books of Better Limited. Better Limited is selling company. So, they are telling selling company, closing ledgers. Ledgers, you should not prepare journals. Realization account, share capital, preference share capital, equity shareholder, preference shareholder, cash. All these ledgers we have to prepare. And opening journal entry in the books of Best Limited. So journals in the books of and not that. Ruko zara, prepare balance sheet. So this problem, uh, in the books of selling company, we have to prepare ledgers. In the books of purchasing company, we have to prepare journals, and we have to prepare balance sheets. In the books of purchasing company, selling company, we have closed. Before I start the problem, go through these 4 line items quickly. The purchase consideration is the trickiest part. Just 2 lines, but it is more than enough to complicate things. At least the C part, read 3 to 4 times. C sentence, 3 to 4 times. Can I? Illustration 6. Illustration 6. As usual, the first step will be calculation of purchase. I am writing all the short form because of space constraint. You have to write in full. Calculation of purchase consideration, particulars and amount. Calculation of purchase consideration. Now here, do we have equity preference separately? No. And even if you see here, just they have given share capital, that's all. Share capital. Now, at present, Better Limited is having only 10 lakhs. 10 lakhs. And what they have given in the question, they have issued bonus in the ratio of 1 for every 2. 1 for every 2. The ratio is 1 share for every 2 share. The ratio is 1:2. So at present, 10 lakh is the equity share. Bonus will be 5 lakhs. Bonus will be 5 lakhs. Now, point number C. The value of shares in Best Limited were considered to be 150 and Better Limited were valued at 100. After bonus, it is 100. The allotment of shares is to be made on this basis. So, the allotment of share should be made on this basis. They are talking on the allotment part, but bhaiya, what is the purchase consideration? Share capital of Better before bonus. Before bonus, how much was the capital? 10 lakh. 10 lakh. Add bonus. Add bonus. 5 lakhs. So now 15 lakhs, everyone. This is my total purchase consideration. That's all. That's all. Read the sentence. The value of both the shares they have given, and the allotment is to be made on this basis. So 15 lakh is your capital, we'll give you 15 lakhs. But number of shares to be issued, will they issue? Will they face value of share is 100? Will they issue at 100 rupees? No, why? 150, 150. So price per share. 150. So number of shares to be issued, it is 10,000. So what Best Limited will do, 10,000 shares, 150, 15 lakhs, pay to your shareholder, Purchase consideration, everyone clear? Yes. Now we will move on to the ledger accounts. But before that, in the books of selling company, very good, Better Limited. In the books of Better Limited. So first one is realization account. Then but that is after bonus. So equity share capital account. Preference share capital account. Then equity shareholder account. Preference shareholder account. And Best Limited. Guys, we prepared cash account because purchasing company did not take it. In this question, they did not even give the breakup of current assets. So cash account not required. Cash account not required. Now, I think I stopped with Vashita Kushali. Drishti, though they have not asked, tell me the journal entry, first entry in the books of selling company. Realization to assets. So to PPE, 15 or 25? 15. Then non-current investments will not come to current asset. 5. So we have transferred, there are only 2 assets, we have transferred both. Himangi, next entry. Liabilities to realization. Now what are the liabilities they have? Only current liability. By current liability 2. Next, Vani. Best Limited to realization. So by best, we calculated already 15 and all the numbers are in lakhs, we'll keep in lakhs. And immediately I'll post it here also to realization 15. To realization 15. Yes. नहीं. Divyansh, Virat, Mehak. Cash क्यों आ रहा है इधर, है ही नहीं cash. Yesterday I said we will do this mistake. Yes or no? Equity share of Best to Best Limited. So here by equity shares. हाँ, आपने equity shares बोला. Equity shares of Best. How much? 15 lakh. Now we have to prepare one more ledger. Equity, preference shares, it's not there, no? So equity shares of Best Limited. And here to Best Limited 15. So this is receipt of purchase consideration. Chaman, next entry. But here it is not that. Okay, fine. Liabilities to bank. But before that, I think expenses. Realization expenses. Realization expense is also not that. Liabilities not taken also not that. So next, Moksha. Preference share capital also not that. Moksha. Equity share capital. So first we have to post the opening balance. So buy balance brought down 10 lakhs. Then buy reserves and surplus 5 lakh. Can anyone tell for what? Bonus. Bonus. CA Foundation. Journal entry for bonus. Reserves and surplus to equity share capital. क्या profit? We have to calculate realization profit also. Yes. How much? Loss. By equity shareholder 3 rupees loss to realization. So buy reserves and surplus, and then you have to prepare, I think, reserves and surplus also. Then we have to prepare a ledger. Reserves and surplus account. Reserves and surplus account. What was the opening balance? 8. In that, 2. Equity share capital 5. 2. Equity shareholder 3. So by reserves and surplus, it is 3. Then what shall we do for this 15 rupees? Transfer to equity shareholder 15. Then this 15 I have to record here also by equity share capital 15. So due entry for equity shareholder over Akshara. Next entry. That we have already passed. 3 rupees is that only. Next, Tanish. Very good. Equity shareholder to equity shares of Best Limited to equity shares of Best 15, and here 2 by equity shareholder 15. I think all the ledgers are tallied. Any ledger which is left out? So all the ledgers. Selling company books is over. Selling company books is over, everyone. Can I continue? Now, next part. Journal entries in the books of Best Limited. Journal entry in the books of Best Limited. So, next, Vansh. Kush. So, we will pay, I said this very clearly, we will pay to liquidator. Business purchase to liquidator of Better Limited. And what was the purchase consideration? 15 lakhs. Next, Harvey. Okay. So, PPE account debit 25, 15. Then current asset account debit 5. 2. Current liability. To current liability. 2. PP 15, correct only. 2. Business purchase. Where debit credits not matching. To capital reserve. To capital reserve 3 rupees. Everyone. Here we are paid less. We are paid less. We are getting net asset of 18, but we are paid only 15. So 3 rupees is capital reserve. Next, Weber.
Better limited account debit, share capital to security premium. ये 5 लाख हो गया।
Nimita, is it? Best limited. Darshan, Ronak,
Liquidity of better limited to equity share capital to business purchase.
Rishi, Ananya,
Liquidator of better limited to equity share capital to securities.
perfect. You missed the liquidator, you missed the premium. So, liquidator of Better Limited to equity share capital to security premium 15 in that 10 and 5. How bhaiya 10 we got here already 10,000 shares face value 10 lakhs and balance 5 lakh is security premium. Balance 5 lakh is security premium. So till here it was simple, easy. Now two things. Bhaiya, last liabilities of Better Limited include 1 lakh due to Better Limited, Best Limited for purchase from it on which Best Limited. So second part we'll do later. This 1 lakh journal entry. Creditor to debtor. Students they write and we reduce the mark. Better to best blunder. Creditor of better to debtor. Creditor of better to debtor. No.
Very much that's better limited to data.
थोड़ा सोचो हे मत सोचो current liability to current asset. Creditor and debtor, it's not given in the question, guys. We have only current asset and current liability. So current liability account debit to current assets, current liability account debit to current assets amount 1. And finally, we have to in that stock we have to reserve the we have to reverse the profit. We have to reverse the profit. Now, liabilities included 1 lakh due to best for purchases from it, on which Best Limited made a profit of 25% on cost. 25%, can I write 1/4 on cost? The goods of 50,000 remained in stock. The goods of 50,000 remaining in stock. So 1/4 on cost is 1/5 on sales, which is 1/5 on 50,000. Everyone, yes. So 10,000. Can I write 0.1?
Yes.
For this 0.1, you will tell me credit, I'll tell you debit. Current asset, very good. Because stock value has to reduce. So current asset, debit, simple, goodwill or capital reserve. In this problem, what do we have? Capital reserve. Now, we did not leave space, no, for journal entries. So somehow manage and write. Which point we wrote journal entry in the books of purchasing company? Seventh point. Seventh point, we wrote journal entry in the books of purchasing. That we wrote 5 points already. So next point, write 7.6, something like that. So seventh, sixth, like that. In seventh point, sixth subdivision, intercompany owings. Intercompany owings. OWINGS. Intercompany owings. Journal very simple, payable to receivable. It can be loan, it can be creditors, it can be bills, payables to receivables. And last, in that same seventh point, seventh subdivision, unrealized profit in stock. Profit is there, but we have not sold, so it is unrealized. Unrealized profit in stock. Goodwill slash capital reserve. Goodwill slash capital reserve to stock. To stock. Here, because we don't have stock, we have used current asset. Otherwise, it is stock. So we have prepared, we have calculated purchase consideration, we have prepared journal entries in the books of selling, ledgers in the books of selling company, journals in the books of purchasing company, and final step. Very simple and easy balance sheet. Balance sheet of Best Limited. बुक लगी आपको? Balance sheet of Best Limited. Generally, when we use internal reconstruction, what do we write? And reduce. Now can we write and increase? After amalgamation. पता चल जाएगा time पे. So balance sheet of Best Limited after amalgamation. So particulars, note number, amount. Everyone, can I start? Yes. So particulars, I have to start with equity and liabilities. Genius. Shareholders fund. Share capital, note number 1. Notes to accounts. And this is the most irritating part. We know the entire problem, but we have to write so much. So first point is share capital. Now authorized, issued, subscribed, called up, paid up, anything given? No. So authorized capital. How many shares?
20,000.
Let's not write itself. Issued capital. Issued capital. So now issued capital, what I'll do, always I'll give the breakup very clearly. Always I'll give the breakup clearly. Issued capital. Existing will not be the right word. Before amalgamation. Before amalgamation, how much it was?
20 lakhs.
20 lakhs. Issued 10,000 shares. 10,000 shares of 100 each. How much?
10 lakhs.
30 lakhs. Everyone.
Yes, sir.
What bonus? This is purchasing company. Selling company issued bonus. Everyone. 50 is premium. See the journal entry. 5 rupees is premium. Everyone, can I continue? Everyone, can I continue?
क्या बता- you
Can I continue? And you see, being an examiner, we will exactly catch those areas where you don't write.
question देखो
Very good. अभी आपको schedule 3 करवाया. Issue of shares for consideration other than cash. We have issued shares, but we did not get money. We got business. So out of about 10,000 shares have been issued for consideration other than cash. And for you guys, so many times in the class. Once upon a time, you missed it. So this is 30, everyone. Share capital, any doubt? No. Next. Reserves and surplus. Note number 2. Reserves and surplus. So securities premium 5. Then capital reserve. Very good. How much? 3. Capital reserve is 3. Then very good. 10,000 we have subtracted also. See, capital reserve is 3. We have reduced 0.1. So it will be
2.9
2.9. Now going to the balance sheet. Here they have some 10. So reserve of, or I'll write better limit, best limited. Best limited, it was 10. Now, but yeah, should I write this 2? 2 not, sorry, not 2, 10. Sorry. Bhaiya, should I write this 8? No, why? We have already given to equity shareholders. We have given to equity shareholders. So all the three put together 17.9. Then shareholders fund over. Then we don't have share application money pending allotment, and I don't think we have non-current liability also. Directly current liability. We are directly given. We will write without note. Never think. Amalgamation, it will not happen. Current liabilities. Current liabilities, everyone. Best limited, how much? 20. Better limited, 2. Less intercompany, everyone, 1. So, total is 21. So liability side done. Next, assets. Under assets, under non-current assets, property, plant and equipment. Property, plant and equipment. Note number 4. So note number 4, property, plant and equipment. Same, best limited, better limited. 25 and 15. Any adjustments you have done here? Everyone, can I continue then? So the total is 40. Then after PPE, non-current investments. No way. Non-current investment, note number 5. You have to show that it belongs to Best Limited. Non-current investment, Best Limited, 5. Then current assets. current assets. Breakup is not given, but we have to prepare a note. Note number 6. Hmm. Note number 6, current asset. Now same this thing I'll repeat. So for Best Limited, current asset is 20, Better Limited 5, intercompany owings 1.
10,000 profit.
Very good, very good. Current asset, see, we have reduced 10,000. So less. Unrealized profit. URP is unrealized profit minus 0.1. 23.9. So balance sheet tallied, our problem is correct, everyone. So what did we do? First we prepared purchase consideration, then ledgers in the books of selling company, journals in the books of purchasing company, and finally balance sheet with notes. Balance sheet with notes. So you can aram se copy, take your lunch and have your lunch. We will continue start the class by 2 o'clock. Mhm. So today's class, if you see effectively in 3 hours, we did 2 problems. Illustration 5 and illustration 6. You can see your workbook problem, at least 20 plus will be there. Textbook, we have only 11. Tomorrow I'll complete the chapter. Practical problem also I'll do in the class. No risks. Yes, come on, come on. Yes, you can complete and then go for lunch.